These are taxing times in the mining game. It's not demand or prices, they're fine. It's government policy that's causing problems, in particular mining tax and carbon tax. The remodelled Minerals Resources Rent Tax targeting coal and iron ore companies is pretty well a done deal. And now the biggest miner of all, BHP Billiton's Marius Kloppers, has put a carbon tax on the table as part of the answer to greenhouse gas emissions. I spoke to a miner who's had a trickier time than most in 2010, Macarthur Coal chairman Keith DeLacy. He's in the line of fire for both taxes and has just emerged from one of the messiest takeover battles of recent years. Keith DeLacy, a stoush has broken out between Andrew Forrest and Fortescue Metals and Marius Kloppers of BHP, which I guess is a reflection of the bigger argument between the small miners and the big miners over the mining tax. So whose side are you on?
Speaking on behalf of Macarthur Coal, I mean, we can live with the MRRT. We certainly couldn't have lived with the original one, the Resources Super Profits Tax. I mean, well, I think what upset us mostly at the beginning of that argument was the insinuation that we as an industry weren't paying fair taxes. I mean, we worked it out at Macarthur Coal that our effective rate of tax, this is pre the RSPT, was 43%. You know, that is company tax plus state royalties. Now, the RSPT would have increased our tax rate to about 60%. And that's just not internationally competitive. It would have ultimately destroyed the resources industry, and that would have had a major impact on the Australian economy and everyone. Now, the MRRT will probably increase our tax rate, depending on the price of coal, of course, but we can live with it.
By how much will it increase your tax rate?
Well, we don't know. It depends on the price of coal, but it'll go up another 1 or 2%, we expect, on current prices. So we can live with that.
That's not very much. I mean, there have been suggestions, in fact, that some of the miners won't get an increase in tax at all as a result of the MRRT. Is that right?
I don't think that's possible, but I'm not sure whether small miners are going to pay more tax either. I mean, the small miners weren't in the MRRT ambit. So, I mean, I think it's a sad reflection on society that we say it's a reasonable tax because it's less bad than the one that preceded it. Nevertheless, if the government, the way it's committed to this tax, well, we can live with it.
What do you think of the process going on now with Martin Ferguson and Don Argus?
Oh, well, I support that. I mean, they're people that have got the respect of the industry. Martin Ferguson is well regarded in the industry, and of course, Don Argus is respected in business and the industry. So I think they'll get to a decent outcome.
Andrew Forrest and Marius Kloppers do seem to agree that we need a carbon tax in order to reduce carbon emissions. What do you think?
Well, I think that would be a pretty lonely opinion in the resources sector. I mean, most of us can't see why we would have a carbon tax in Australia in advance of the rest of the world. It would just impact on our competitiveness, and it would do nothing, absolutely nothing for emissions, for carbon emissions. In fact, there's a good argument to say that it would actually increase global emissions. Australia is the most efficient miner in the world, and we've got the best coal. And if you are going to replace Australian coal, well, somebody told me the other day, with Indonesian coal, you'd have to burn 1.5 tonnes to get the same energy as you get from 1 tonne of Australian coal. If you're going to use Canadian or the United States coal, I mean, they rail it 1,000, 1,500 kilometres. So there's a lot more energy being consumed, so you do absolutely nothing for global emissions. I mean, I know everybody feels good about a carbon tax, and I think I'd support a carbon tax before the ETS, simply because people can understand it better. But let's get the whole of the world working together on this.
Isn't coal's future limited without sequestration?
We seem to live in a bipolar world. Everybody's dumping on coal on the one hand, and then everybody wants to pay more for our coal on the other hand. I mean, I don't think anybody realistically can say that in the near future that we're not going to need coal. When people don't need coal, well, all right, we'll stop mining it, but we don't see that that's a viable, or that that's likely any time soon.
The other big news on at the moment is the public float of QR National. The miners obviously tried to buy part of that business, but that fell over. Are you concerned now that the Queensland Government will get a big price for QR National at your expense?
Yeah, I don't think it's fair to say it fell over. It wasn't accepted by government. The industry was united in its determination to buy the below-rail assets. And the reason for that is that, we've got a different attitude. This IPO, it's all about return on investment. The industry was all about increased tonnage. So what this IPO will be doing is sweating the asset to get an increased investment, and we'll be back to where we were with QR. I mean, if they're going to provide additional capacity, they'll be looking for take-or-pay contracts going out 15 years, and they won't commit to anything until all of the additional tonnage is underwritten. They'll be asking for higher returns, and they're in a monopoly situation. And that means that the provision of that capacity will be 5 years behind when it's needed, which has always been the case. That's not good for the coal industry, and it's not good for the Australian economy. And also, we're not happy, I suppose, about the integrated nature of the IPO, below rail and above rail assets operating together. That tends to make it more difficult to get dinkum competition in the above rail sector. So we're not happy with it, but I guess we've got to live with that one too.
In fact, there's an interesting parallel between QR National and your company, Macarthur Coal, where the customers of QR National, the miners, wanted to buy part of the business to protect themselves, and in your case, your customers and Chinese investors own about almost half the company, and that was why Peabody Coal's bid for Macarthur fell over earlier this year, because they didn't want to sell. So is there a potential for a conflict between those customer shareholders and the investors who own the rest of Macarthur Coal?
Well, on the margin, yes. Look, if I can say that if we get takeover offers, we will consider them in the interest of shareholders. But of course, we've got to take into account, of course, the interest of our large shareholders as well. We at Macarthur Coal tend to look long-term ourselves, and we're very bullish about not only about the price of coal, but our capacity to increase production. I mean, we expect to double production over the next 4 years.
Yeah, and there's some talk of Peabody coming back to have another go at you. Any sign of that?
Well, we've got no sign of it, and there's nothing on the table, and we've got enough to worry about. When there's something there, we'll worry about that then. But I'm just saying to shareholders, you've got a great exposure to coal, good quality coal with Macarthur Coal, and we think there's a great future.
And your bid for Gloucester was an attempt to expand into thermal coal for power stations. Are you still interested in doing that?
It wasn't necessarily all into thermal coal, but we think if we can diversify port, climate and coal type, then we're a bigger and a stronger company. And when they started with the RSPT, the resources tax, we started to think, gee, maybe we should be outside Australia as well, and we're not even ruling that out.
So you're still looking at potential takeovers?
Oh yes, we're looking, most of our focus is on organic growth. We've got a whole range of exploration tenements. Before the end of this calendar year, before Christmas this year, we will be announcing our next mine from which one of our exploration tenements that we're going to develop. And that's what's going to enable us, together with the Middlemount, our third mine, so we're going to start our fourth mine. So we expect to be producing 9.2 million tonnes by 2014. So that's where most of our focus is, but I can assure you that we're looking at opportunities everywhere, because we see ourselves now as we've got a strong balance sheet, and we're a very professional miner.
Including outside Australia?
Yes, I don't want to overstate this. We will look at opportunities wherever they arise.
Thanks very much for talking to us, Keith DeLacy.
Okay, thanks, Alan.